Joining me now is Wayne Miller, Executive Director of the Venture Center in downtown Little Rock. They do work all over the country, though. Wayne, good to see you again. Thank you for being with us.
Hey, thanks for having me on. It'll be great to see you. Glad to see you're doing well.
Before we dive into some upcoming events at the Venture Center, I want to talk a little more big picture. What have you been seeing post-pandemic in terms of entrepreneurship, whether that's utilization of your group's resources or just some general trends that you've been seeing?
Yeah, I mean, pretty interesting question. First of all, I think that the pandemic did inspire some entrepreneurship. People got stuck at home and some folks decided to retire a little early. So I think we've seen certainly an uptick in folks' interest to build and grow businesses. The average age of an entrepreneur is about 38 years old today. I don't think those folks are retiring, but I think the older folks, probably 60 plus, are doing more in that vein, which I think has been sort of interesting. We are getting some good energy around people getting back together. Still a little bit of ebb and flow as to the extent of the intensity of the virus, and still some caution, certainly in our area. But I've had the opportunity to travel a lot over the last 2 or 3 months, going back to conventions, getting back together with people, both from an entrepreneurial as well as from a fintech perspective. And folks are certainly glad to be back together. So I think that's a good thing. The other thing is that there are some economic pressures right now that are being felt by entrepreneurs as we look at the valuations of companies, which have been highly discounted over this last few months. And there's some opportunities out there, et cetera. But it's a good time as an entrepreneur to keep your powder dry and prepare for what could be a fairly long, maybe 12, 18, 24 month cycle to raising capital again. So we're seeing some folks adjust. Some of this, there were valuations that were pretty frothy in the market. So this was, to some degree, I think, an appropriate correction, but still a lot of capital out there, a lot of fat balance sheets, but people are going to be cautious and looking for deals. But, look, if you build a good business, you can always find money to get it going. So some perspective for you there.
You have helped move quite a few good businesses through there. I want to talk a little bit more in the history of what you guys have done in the fintech space with some of the cohorts that you've brought in, with some of the talent that you've helped assemble and push out the door into the private sector and public sector space there. What's been the track record? I think I saw a statistic that said about 94% of the fintechs that have come through the Venture Center have been successful. What does that mean?
Yeah, it's a great question. So when we say that, so 94% of the companies that have been through our programs, and we just started our 7th program with FIS. Actually, yesterday was the orientation. So when you combine that with the ICB, that's now 11 programs, which puts us at 107 companies totally engaged with the Venture Center over what has been a 7-year period. But what we reflect on that for 2 reasons. One is, if you look at typical incubation and acceleration programs, it tends to be converse. So it tends to be about a 5 to 6% success rate. But just part of that's our methodology and how we work with our clients. But to us, that means that they are still in business, they're active or have been acquired. So that is what the 94% reflects on from a metrics perspective. The other thing that's pretty important is that the process that we use here, working with all the banks that we bring through, et cetera, who give us this opportunity to de-risk these companies in a fashion that's, I always like to equate it to Gene Hackman and Hoosiers when he tells this guy I want you to guard this guy so closely that you know the flavor of his chewing gum at the end of the game. We spent 16 weeks with these guys and man, we know the flavor of their chewing gum and what they're made out of. So it gives us the capacity to de-risk them, but it's enabled us to get them to a position where the average capital raise coming out of the program now is north of $8 million. And that takes out a couple of the biggies. We've had one company in there. We've got actually 3 or 4 unicorns that are now in existence as a reason, not so much as the result of this, but I think we've had impact on their growth and their success.
So you've added another layer to something that you're going to do in the fintech space in mid-August. I think the 15th through the 17th, you're going to do this Vincent Fintech Summit. Tell me what to expect.
Yeah, it's been kind of a vision we've had for about 3 or 4 years, as we've been able to leverage and really exploit the great fintech history that exists here in Little Rock, as well as, my God, the entrepreneurial DNA in the state is pretty much second to few. And what we've tried to do is really build on the accelerator platform that we've built. One of the things that we have seen is, the last ICBA program, 250 banks participated, and Most of that was done virtually, of course, because of the environment. But also, that's nearly 1,000 bankers. Arvest, for example, had 60 people on the call and spent 6 or 7 hours on Zoom getting to know these companies and so forth. But Roby, what we've been able to do is build a great deal of trust in an environment where both the fintechs and the banks can win. And they get a chance to sit down at the table and collaborate effectively over the solution, the problem, and the companies have become more mature over time. And what they really provide for the bankers coming today is they provide really, we like to suggest, are shovel-ready or bank-ready solutions. They can deploy these solutions tomorrow in their institution. And what really matters to them is that helping them save money or make money, right? That's kind of the key and the root of what we do. But this trusted partnership has enabled us to put our hand up to say, hey, what if we were to bring all of our alumni and some of the leading subject matter experts, both in the regulatory, banking as a service, digital transformation, all the various spaces that are impacting banking today. What if we brought everybody together to collaborate at a higher level and at a bigger scale? And that is very much what we've tried to create with Vincent. And I have to tell you, this has been a pretty big lift for our team. We're just about 10 or 11 people here at the Venture Center. So to do a conference at this level for us with now nearly 400 people coming in attendance, I can't say enough about my team's effort and the community, but really the way the sponsorships, the banks, the fintechs, we have over probably about 130 bankers. Maybe that'll get to 150 by mid-August. So it's really extraordinary. And also the way the state has supported this. So we hope to really exploit that trust and that help to create these partnerships to bring these folks together, and also a more intimate environment than they're accustomed to. Some of these big events are thousands of people where the capacity to have meaningful conversations is pretty tough. So we're hoping a lot of those things will occur and that everybody leaves as a winner. The bankers obviously get a little better insight into what's happening in our industry and close it down with the hope that we'll give folks a good glimpse into the future and let them go home with some new tools in their toolbox.
All right, you can learn more about that at the Venture Center's website. It is the Vincent Fintech Summit, August 15th and August 17th. Wayne, thank you so much for being here. It's good to catch up with you, and keep up the good work.
Hey, Roby, thank you. And you too, keep up the good work, and look forward to seeing you all there. And again, thanks to our community who's been so supportive here and for always taking a moment to share what we're doing. We appreciate you.
You bet. We're back with more right after this.